Hi everyone, welcome back to Saheb Academy. Today in this fourth video of Departmental Account chapter, we are going to solve this problem of Departmental Accounts which was asked in Bangalore University's bcom paper in 2017, right? I know it's an old question, but understand recently all questions were very simple. So this is a complicated question that you have to understand properly, because here they have asked trading and profit and loss account and balance sheet, and then there are some interesting adjustment like service rendered between the departments. Okay, so we'll read everything and we'll understand and analyze this question, and then we'll see the solution, right? Let's begin. Now see here, from the following particulars, prepare trading and profit and loss account in the books of a trader and also prepare the balance sheet. Okay, both the things we have to do. So let's just see what all items we have and where it will go. First we have stock on 1st April 2016. So this is what opening stock which will go on debit side of trading account. Then we have purchases. Purchases will also go on debit side of trading account. You all know this, simple. Then sales will go on credit side of trading account. Yeah. And then wages debit side of trading account. Then we have rent, taxes and insurance. Where this will go? This is indirect expense. This will not go in trading account, it will go in P&L, isn't it? Yes. Then we have sundry expenses, P&L item, no doubt about that. Salaries, P&L item. Yeah, lighting and heating, P&L item. Yes. Then we have discount allowed also P&L. Yeah, we are allowing the discount, this is an expense. Now, how are we going to distribute this discount allowed? You all know it is connected with the sales. We give the discount to our customers. Yeah. So sales ratio. Fine. Okay. Then discount received is connected with purchases. Discount received, purchase ratio. Where this will go? P&L only. Yeah. On the credit side, it is income. Okay. Then we have advertisement. Fine. This will also go in P&L. It is a indirect expense. Carriage inwards. Carriage inward and wages are same only, they are direct expenses, so this will go in trading account on the debit side. Fine. Then we have furniture is a non-current asset, isn't it? So it will go in balance sheet. Then we have plant and machinery, the same case, non-current asset will go in balance sheet. Okay. Sundry debtors is a current asset, it will go in balance sheet. Yes. Then you have sundry creditors. This is a liability, current liability. It will go in balance sheet. Next we have capital also balance sheet. Yeah, this is the opening balance which we get from trial balance, isn't it? And then what we do to this? To this we give the effect of net profit or net loss, whatever we have in the question. And then we also see whether we have drawings. If we have drawings, we subtract it from the capital. See, we have the drawings. So what are we going to do with this? We will subtract this from the capital. Yeah, in the balance sheet. Clear? How much? 4,500. Simple. Then we have cash. What are we going to do with the cash? Simple, current asset, it will be just shown in the balance sheet. Is it clear? Okay. Now let's just see the adjustment. See, first adjustment is we have a internal transfer of goods. Department A is giving the goods to Department B, isn't it? So what's happening? Understand, how much worth of goods? 420 worth of goods have been sent from Department A to Department B. So the sender always becomes the seller and the receiving department becomes the purchaser. You all know. What do we do with sales? We credit them. What do we do with purchase? We debit them. Yeah, that's the rule, isn't it? Yes. So we will easily take this in the trading account. You all know, to interdepartmental transfer and by interdepartmental transfer. Yeah, we'll see the solution. It's really simple. It's happening at cost price only. There is no loading concept, nothing. Okay, simple. Next, B adjustment, rent, taxes and insurance, sundry expenses, lighting, heating, salaries and carriage inwards to be distributed in the ratio of 2/3 and 1/3 in A and B. 2/3 and 1/3 simply means 2:1, isn't it? That's the ratio for all these expenses: rent, taxes and insurance, sundry expenses, lighting and heating, salaries and carriage inwards. Is that clear? See, lighting and heating, salaries, sundry expenses, rent, taxes and insurance, and then carriage inwards also. Okay, simple. Then advertising, they are talking about advertising to be apportioned equally means half. Okay, 1:1, right? So that's for advertisement. This will be done 1:1. Is that clear? Okay. Then discount allowed and received to be apportioned as per sales and purchases. Yes, that's what we always do. Discount allowed as per sales ratio and discount received as per purchase ratio. ignoring the transfers they are saying. Yes, there are transfers. We'll always ignore that even if the question doesn't say. Yeah, we'll not consider that in the ratio calculation. So shall we calculate the purchase ratio and sales ratio? It's really simple now. Purchase is 35,000 and 30,000. So see here, it's really simple. Yeah, 35,000, 30,000, just cut off all the zeros. 35 is to 30. Now just use the 5 table. 5 7s are 35, 5 6 are 30. 7 is to 6. That's the ratio, purchase ratio. Sales ratio, 60,000 is to 40,000. Cut off all the zeros. You get what? 3 is to 2, isn't it? 6 is to 4, right? So 2 3s are 6, 2 2s are 4. Is that clear? 3 is to 2. You just have to simplify, or you can use the whole figure also. Here we have simple figures, isn't it? So many zeros, so easily you can cut off and simplify. Okay. Then they have given us the ratio for rent, taxes and some other expenses. So see that given ratio for rent and all these. Yeah, 2 by 3, 1 by 3 they said. That simply means 2 is to 1, isn't it? Yes. And then for advertising we have 1 is to 1 ratio for advertisement. The question is saying this adjustment. Okay, then what happens? See, E, depreciation at 10% per annum on furniture and plant and machinery. Okay, we'll do that. Depreciation will have to take in P&L, isn't it? And then we have to deduct that in the balance sheet as well. Yeah, two things we have to do because it's an adjustment. But how are we going to distribute it in the P&L? How? That ratio they have given over here. See, they are saying in the ratio of 3 is to 1. Is it clear? For depreciation. Okay, so ratio for depreciation will be 3 is to 1. All right. Okay, ratio calculation, everything is over. You understood? Easy. Then they are saying, see, services rendered by B department to A department. Yeah, B is giving service to A department, and what has happened? See, understand, service has been provided, that's fine, but one thing they have done, they have included it in the wages of B department. You see, rupees 500. How much? Rupees 500. So here in this 2,700, what do we have? We have 500, that service which has been rendered, inter transfer of service. Is that clear? How goods have been transferred between the department, the same way service has been provided. It's common. Okay, so it's same thing only. What we are going to do, simply just understand, we are going to just subtract 500 from over here and add 500 in this. Okay, that's all we are going to do. So that's the thing. Let me just show you the concept of that. See here, it's really simple. Let's just say, for example, it is not included in the wages. Then how it happens? See, service rendered by department B to department A, let's just say rupees 500. Department B is provider of the service. Department A is receiving the service. Understand properly. For department A, it is an expense, isn't it? It's an expense because they have got the service, right? They have got the benefit and it is expense for them. But these people have provided the service. They will get the money, isn't it? So for them, it is an income. They will receive the money. These people will receive the service. It's like that, right? So it's income from the provider, and for receiver, it's an expense. So what you're going to do in the P&L account, simply you are going to take to service rendered by service rendered. Okay. Here in the A department, you are going to take because it's an expense for them, and for the department B, it's income. So you're going to take the amount in the B column. Yeah, in the income. Is that clear? That's what you are going to do in the credit side, and here it will be in the debit side. Fine. But if they say the question like over here, it is included in the wages. If they say that wages, then the entire game changes. From P&L, the game changes to the trading account. Okay. See here, what happens is service rendered by B department to A department. Yeah, this question only, this scenario. Service rendered by B department to A department, rupees 500, included in wages of B department. So what you have to do, you have to go in trading account. Why? Because wages is related with trading account. So go to the trading account, deduct 500 from the department B wages where it is included. Yeah, 500 you will deduct, and then you will add 500 in the department A wages. Okay, this treatment you have to do. Is it clear? This is what you have to do. Okay, deduct 500 from over here and add 500 in this. 8,200. This will become 8,700. This will become 2,200. Fine. We'll see the solution and you will understand each and everything. Right. Then the last adjustment, see here. Stock on 31st March 2017, where Department A rupees 16,740 and Department B rupees 12,050. So this is what? Closing stock of Department A and closing stock of Department B. What will happen of this? You all know. It will go in trading account on the credit side as well as in the balance sheet, right? Here it will be current asset stock, and here it will be, on the credit side you will show it. Fine. Okay, so this was the whole question analysis. I hope you have understood the question. Now let's just see how we are going to solve this. Now see, here we have the solution: departmental trading and profit and loss account for the year ending 31st March 2017. It's really simple. The format you all know. We have two departments over here, so two department columns, the important columns. The total column is the optional one, right? Okay, debit side, credit side. So all expenses will come on debit side and all incomes will come on credit side. You all know that because it's a nominal account. That's the nominal account rule. Yes. Now, first we are going to start with trading account. All direct expenses will come on debit side. All direct incomes will come on credit side in the trading account. So let's start. First, we have what? Opening stock in the question. How much? 17,400 and 14,700. Let's just take that on the debit side of trading account. See here, 17,400, 14,700. Just add that. That's equal to 32,100. Okay, that is how you have to go about total column. Just make sum of A and B. Clear? Easy. Next, after opening stock, we have purchases 35 and 30. Just take that 35,000, 30,000. That's equal to 65,000. Easy? Very easy. Next, sales 60,000, 40,000. Sales is direct income which will come on credit side of trading account. By sales 60,000, 40,000. That's 1 lakh. Easy? Okay. Next, we have wages. Wages 8,200, 2,700. Where it will go? It will go in trading account. We all know on debit side it's direct expense, but there is an adjustment regarding that. We can't take it directly. What's the adjustment? We read the adjustment. See here, services rendered by B department to A department. B department is providing service to A department. If B department is the provider, then obviously he will get money, right? This department will get money. So for them it's an income. But for the department A, they are receiving the service, they are getting the benefit, so they have to pay. So for them it's expense. Is it clear? That's how the treatment is, the logic. So what we are supposed to do is, actually we were supposed to take it in the P&L like this. Yeah, expense and income. But what happened? The question told us that in the adjustment that this services rendered, interdepartmental service, it has been taken in the wages of B department. It has been taken in the wages of B department. It is existing over here in this 2,700. So we have to remove that from there. Yeah, see here, the second scenario. Services rendered, that's fine, but it is included in the wages. So what we have to do in the trading account, we have to deduct 500 from department B's wages, and that 500 we have to add in the A's wages. That's what we have to do. That's the treatment in this question. Okay, if that wages line was not there, then we would have done this. Okay, right. So how it will happen? See here, let me just show you in the trading account. We will take two wages, but we will, subtract 500 from the B's wages and we will add it in the A's wages. So the figures will change from the trial balance. In the trial balance, it was 2,700. 2,700 minus 500, that's equal to 2,200. 8,200 plus 500, that's equal to 8,700. That's the concept. Is it clear? B's wages are inflated. We are subtracting and bringing it down. And that 500 is an expense of department A, because department A has got the service. He is the receiver. So we have to increase his expense. Is it clear? That's the logic. Okay, fine. Understood about the wages adjustment. Now, similar to this is what? Internal transfer of goods adjustment, isn't it? So let's do that. See here, the question has said internal transfer of goods from department A to department B at a cost price of rupees 420. 420 worth of goods. What has happened? It has been transferred from one department to another, from A department to B department. So A is the sender, B is the receiver. Sender, for him the goods will be, this transaction will be sales, and for B this transaction will be purchase. So what do? We will treat it as sales, we will credit the A department and we will here debit the B department. Okay, that's what we are going to do. It's really simple. See here. Yeah, to interdepartmental transfer and by interdepartmental transfer. In trading account only we are going to do. Why in trading account? What's the logic? See, goods are directly related with the main trading activity of the business. So that's why over here. Okay, it's like purchase and sales. Yeah. So A to B, right? So who is the purchaser over here? The purchaser is B. So it will come over here 420 debit. Okay, because he has received the goods. Yeah, department B has received the goods. And then who has sent the goods? The sender is A. So for him it's sales. So over here on the credit. Remember, sales always credited, right? And purchase is always debited. So in that logic only we are doing this. Fine. So like this you have to take it. In the total column directly you will write 420, 420, 420, 420. Okay. Is it clear? You understood about the interdepartmental transfer? Easy. Next, what do we have? Next, let's just see, do we have any more direct expenses? We are done with wages, right? Then all our P&L items only. See here, P&L, P&L, P&L. Okay, see here we have carriage inward. This is also direct expense. Yeah, it's a direct expense. It will go in trading account. How much? 2340. How are we going to apportion this? The question has said we have to do this in, see here, 2:1. Carriage inwards, right? So we'll do it in 2:1. Carriage inward total is 2340. You will write in the total 2340. Then you will do the apportionment. 2340 into 2 divided by 3, that's equal to 1560 minus the whole amount 2340, that is equal to 780. Okay. The second department I have just found out as a balancing figure, because you know only two departments are there. For one we calculate, for the other balancing figure. Is it clear? Okay, understood. After this, do we have any more direct expenses? No, we don't have any more direct expenses, right? So we can see the closing stock now. See here, the last adjustment, stock on 31st March 2017. On the year end, the stock was, see here, rupees 16,740 and rupees 12,050 for the department B. So what do we do of the closing stock adjustment? Do you know? We take it in two places. You all know this. One in the trading account on the credit side, and then in the balance sheet as well as a current asset, because this is unsold stock which is left at last. So see here, closing stock will come over here by closing stock 16,740 and 12,050 rupees. If you add those two, that's equal to this 28,790. Clear? Okay, we are done now. Okay, everything about the trading account is done. Now we have to just find out individually which side of department is bigger or heavier. Is that clear? Yes. So here what is happening is, if we just make a sum of this, see here, 17,400 plus 35,000 plus 8,700, yeah, department A I'm doing, plus 1560, it's equal to 62,660. Then we have to check over here, 60,000 plus 420 plus 16,740. So this side is bigger. How much? 77,160. So this you have to write on both the sides. See here, 77,160 over here also, and here also 77,160. Then you have to go on subtracting all this. That's equal to 14,500. Incomes are more than the expenses of department A we are talking about. Individually we have to do of departments. So 77,160 and then minus this, 77,160 minus 62,660, so that's equal to 14,500. You see, like this you have to do. 14,500 is the gross profit. The same thing you have to do with the department B. In department B, what's happening? The credit side is bigger. 40,000 plus 12,050, that's equal to 52,050. This 52,000 will come over here, and then you will take this 52,050 and just go on subtracting all this. That's equal to 3,950. Is that clear? So in both the departments there is gross profit. Then we'll just make a sum of this, 18,450, make a sum of this, that's equal to 1,29,210. The same thing over here also. Is it clear? So trading account is finished. Once trading account is finished, then you have to just cross post it in the P&L. You have to start the P&L now. So see here, it will come by gross profit brought down 14,500, 3,950. Okay, exact copy paste. Okay, fine. Now what we are going to do in profit and loss, we'll take all indirect expenses on debit side and indirect incomes on the credit side. Is it clear? Okay. So first, what do we have? Let's just look in the question. If we see in the question, see here, first we have rent, taxes and insurance. 9390. Let's just take that 9390. How we have to distribute this? We have to distribute this in the ratio as the question has said. How much? 2:1, right? So in 2:1 it has been distributed. Fine. Then we have sundry expenses. See, all this you have to take. Okay, 3600, salaries, lighting and heating, yeah, all these are what, 2:1 only. Okay, so salaries, lighting and heating, yeah, I'll just show you one, rent, taxes and insurance only, then rest are all same only. 9390 into 2 divided by 3, that's equal to 6260, yeah, and for the remaining you have to do the balancing figure, minus 9390, that is equal to 3130 for the department B. Is that clear? This is how you have to do for everyone. Okay, then what do we have after this? See, we have discount allowed. Discount allowed is what? It's an expense and it will be distributed in the sales ratio. Yeah, sales ratio we have already calculated, isn't it? Sales ratio was what? Sales ratio was 3:2. So let's just do that. Discount allowed is how much? Discount allowed is 220. Yeah, 220. 220 into 3 divided by 5, that's equal to 1332. Okay, discount allowed 1332 for department A, and then for department B, balancing figure minus 2220. Okay, that's equal to 888, right? 8888. Fine. Discount received next we have. Discount received 650 we have. Discount received will come on the credit side of the P&L because it's an income. See, 650 in which ratio? In purchase ratio, because we have got the discount from our suppliers. So what's the purchase ratio? Purchase ratio is 7:6. Yeah, that's the simplified version. So see here, 650 into 7 divided by what? 13, isn't it? Yes, so that's equal to 350. Okay, and then 300 over here as a balancing figure. Is it clear? Simple. Next, what do we have after discount received? We have advertisement. See, for advertisement the question said we have to do it, you know, equally. So advertisement is 3680. Two departments are there. Divide by 2. 3680 divide by 2, that's equal to 1840. So see, advertisement 1840. Is it clear? Simple. After this, what we have to do? After this we have what? Carriage inwards. Carriage inwards is already done. We have taken in trading account. Then we have furniture, plant and machinery, sundry debtors. Yeah, all are done, isn't it? Yeah, all are done. Nothing else is left. Okay. Then see, in adjustment, do we have any more expenses? Anything? See, in adjustment, if you see, we have depreciation at 10% on furniture and plant and machinery. So plant and machinery 10% means how much? 2100. And then on furniture 10% means 300, isn't it? It's 3000 now, so 300. Yeah, so see, depreciation on furniture and depreciation on machinery. In what ratio we are going to allocate that? We have got the whole figure 300 and 2100. How are we going to distribute? We are going to distribute as per the adjustment. They have said 3:1. They have said, so we will follow that. 3:1 they are saying. So see, 300, yeah, if you do about furniture, 300 into 3 divide by 4. 3 plus 1, yes. So that's equal to 225. So 225 for department A, and for the department B, balancing figure, yeah, minus 300. Balancing figure is 75. Okay, and then for machinery, 2100 into 3 divided by 4, that's equal to 1575 for department A, and for department B, balancing figure minus 2100, that's equal to 525. Clear? Easy. So all expenses in P&L are done. Yeah, nothing else. We have done with the adjustment also. Now we have to find out which side is bigger. Can we see the total and do this? No, always individual department wise we have to do. Okay, always department wise. So see here, in credit we have this only 14,500 and 350. Yeah, if we just add that, then that will be equal to 14,850. But if you see here, we have lots of number. Let's just start from the debit. 6,260 plus 2,400 plus 2,000 plus 1,400 plus 1,332 plus 1,840 plus 225 plus 1,575, that is equal to 17,032 rupees. Yeah, so it's bigger. Which side is bigger? Debit side is bigger. Expenses are more than the income, so obviously there is a loss. Okay, obviously there is a loss. So 17,000 is the, you know, the bigger amount, 17,032. So it will be taken on both the columns. Yeah, in the totals, here also, and then 17,032 minus 14,500 minus 350, that is equal to 2,182. Let's just do minus 14,500 minus 350, that's equal to 2,182. That's the net loss. which will be transferred to capital account. In balance sheet, we have to deduct this in the capital. Okay, fine. What about the department B? The same way we have to do. In department B also what happened? Debits are more. So it's 9,358. So we'll take it on both the sides. Then 9,358 minus 3,950 minus 300, that's equal to 5,108. Is it clear? Here also net loss. Here also expenses are more than the incomes. Fine. So both net loss. So if you just add these two net losses, you will get 7,290 total net loss. Is it clear? Simple. So now we have to prepare the balance sheet. Let's just see the balance sheet. You understood this, right? It's really simple. Now let me just show you the balance sheet. It's really simple. It's not difficult. In balance sheet, see, first let's just do about the capital only. Okay. The opening balance of capital was how much? 47,660. Okay, we'll take it over here, 47,660. Then the net loss which has happened, you will take it over here. We have to subtract that. See, net loss, how much? 2182 and 5108. See, 2182 minus 5108 also minus. Both you have to subtract. And then drawings were there in the question. How much drawings? Drawings are 4,500. That also you have to subtract. So that is equal to 35,870. And then we had creditors in the question. How much? 30,650. So take that 30,650. All liabilities you have taken. Just one liability was there and capital. Okay, right. Now in the assets, what do we have? Just see in the question. It's really simple. See, always remember the format is easy. First capital, then non-current liability, then current liability. Here non-current assets, then current asset. This is the basic format, category wise. Okay. Individually you have to see what is there in the question and take it in that way. So see, asset, yeah, see, plant and machinery and furniture. These are non-current asset which will last for a longer period of time. 3,000, 21,000. Take that 3,000, 21,000 in the inner column. Then we have done depreciation, right? We have taken depreciation. How much? 300 and 2,100. So show that. Minus 300 minus 2,100. Subtract that. Okay, 2,700 over here, and here it will be 18,900. Is it clear? Simple. Then we have current assets in the question. See, we have sundry debtors and we have cash, isn't it? Sundry debtors how much? 6,060 rupees and cash is 10,070. Just see, sundry debtors, cash 6,060 and 10,070. And then the most important thing, the adjustment, we have closing stock. Closing stock will always come, right? It's a current asset. How much? 28,790. We can get that figure from the trading account. Yeah, so see here, 28,790 closing stock. Is it clear? Simple and straightforward. Your answer is over. Was it difficult? No, it's really simple and it tallies. Yeah. Do you want to see the sum? Let's see the sum quickly. 2,700 plus 18,900 plus 28,790 plus 6,060 plus 10,070, that is equal to 66,520. Yeah, the total of assets. And then total of liabilities and capital, let's just see, 35,870 plus 30,650, that is equal to 66,520. So it tallies. Is that clear? If it tallies, then your answer is right. It always will tally. Fine. Okay. So just take the screenshot of the balance sheet. Then see here we have the departmental trading and profit and loss account. Yeah, just take the screenshot. It's really simple. If you have any doubts, then comment down below, or you can always message in Instagram. See, these were the ratios, isn't it? And then the interdepartmental transfer, and then see service rendered between department, this concept, right? Do you want to see the question also? See here question. So yeah, that's it for this video. See you in the next video. Bye.